Hey, John Mayfield with Global Real Estate School. Thank you so much for joining the podcast. And we have another one of our USA Mortgage loan officers with us today on the podcast, Kyle Parmenter, who's from the Kansas City area. Kyle, I hope I pronounced your name correctly. Thank you so much for joining us.
Yeah, thanks for having me. It was great to meet you at the conference, and definitely looking forward to it. Love chatting real estate.
Yeah, same here. And I love your backdrop. That's really cool there. Is that, what movie is that from? Or
Wolf of Wall Street. So Jordan
okay,
Belfort.
yeah.
Yeah,
Very cool backdrop. I
yeah,
just redid my the back of my. I actually have a little studio in my basement, so I had this bookcase. It was an older bookcase, but I wanted something that was a little bit more neutral. And my wife does all of the stuff. And then I just was fortunate and blessed to be Missouri Realtors president. So they gave me this beautiful eagle that's behind me, and so it's back there. But anyway, enough about that. We want to talk about mortgages and USA Mortgage and some of the cool benefits. And one of the things that I really am excited to talk to Kyle about is the fact that he likes first-time home buyers, and I do too, Kyle. But what are some of the things that you run into with first-time home buyers, or what advice would you give to someone who's never purchased a home and they're thinking, gosh, now's the time to buy a home? What are some issues that pop up that you see, or things you would forewarn or advice you would give to first-time home buyers?
My big, education point really is, especially if they're renting, which obviously most first-time home buyers are, unless they're 3 years out from owning one. But most of the ones I work with are renting. You can really just never time the market. So I always try and tell them it's never a bad time to buy real estate at the end of the day. So USA Mortgage has a really cool promotion right now where we're doing free refinances on the lending side. So I kind of tell them, yes, rates have gone up quite a bit from, the low points of COVID when we got down to twos and threes. So, it's kind of a new normal of rates out here, but we're still historically low. But the cool part is if we do get some rate relief into spring, we'll do a free refinance for you. So there's a lot of first time home buyers I talk to. They're just like, they kind of think to themselves, I want to wait till rates go down, or I want to wait for this or that. My big thing that I try and tell them is, look, if you're ready, buy. I mean, there's seller credits being handed out right now. So you can basically get a credit towards your closing costs and get in for a lot cheaper. And then when rates do go down, prices are going to go up, and, you have that free refinance in your back pocket. So that's the big thing I always try and educate on is if you're ready, buy. Don't try and time the market. And it can be a little scary process for the first time, obviously. It's a big purchase. Most people, the biggest purchase they make in their life. So just kind of making sure they understand that how important that purchase is, and, that I'll walk them through every step of it, be educational, available, that type of stuff, and just kind of ease their mind. I think it's really important to work with a loan officer that's going to be available for them 16 hours a day, 7 days a week. You don't want to, be in a situation on the weekend where you're about to put an offer in and not knowing the specifics of your loan, or like what that might do to your debt to income ratio, stuff like that. So just really making sure that they're comfortable, supported, and know they're making the best purchase of their life, basically, is kind of what I really try and focus on.
That's a great point. And talk to me a little bit about the refinance. So in other words, if you finance today, go ahead and get in your dream home, and rates come down in April or May, you'll do a refinance with no charges. Was that correct?
Correct. Yeah. So basically, like I said, right now there's a lot of seller credits being handed out either towards closing costs, or if they're cash flush, we can actually take it towards a 2-1 buy down. And we can talk a little more about that later if we want. But that's just a way to buy down your rate the first couple of years. There's a lot of ways to use those seller concessions, and they're a lot more powerful than just a standard price decrease. So basically how to leverage those in your negotiations. And then, so get in the house now. Yeah, like I said, we'll have a rate in the sixes as of now. But say we get low fives by May, or even high fours in a best case scenario, USA Mortgage will refinance you for free on the lending side. You'll still have to pay your title fee, so I can't call it fully free. But, basically on the lending side, it's going to be completely free for anyone who purchases with us. So that, in my opinion, has been a very big tool for us to, ease the rate concern, because I do understand how scary it can be going from 2 or 3% rates up. Well, we ran up into the sevens. Now we're back down to sixes, but I can see how scary that would be, because it's a new normal out here. So I definitely sympathize with that. But this product has allowed us to kind of protect them either way. Because there is, I mean, in a downside scenario, we can see runaway inflation like the 80s as well, where we see 14% rates again. So hopefully that doesn't happen. But if it does, you're going to love your 6% rate at that point. So they're really protected either way. And for most people, it's at least a 5 to 7 year investment. So that kind of comes back to not timing the market as well, and just making sure that, you know, you're building equity and you're not paying your landlord, you're paying yourself every month. And if we do get the rate relief that all of us want and hope comes, then we'll do it for free. So it kind of gives them a protection both ways, basically.
Great point. And it's funny because just a month or two ago, I did a video scenario, and you can find it on my Global Real Estate School YouTube channel for those who are listening or watching. But I compared the fact that, okay, rates are at 6%. You're thinking, maybe I want to wait to get back in the market. So you sit out of the market for 2 years, and then, rates come back down or whatever. What effect does that do? And in other words, Kyle, what I found out was if you sat out and you had you sat out of the market, had you gotten in, even though you would have paid a higher interest rate, we calculated the interest of that higher, the additional interest you would have paid over that 2 year period. But if the home would have appreciated 10%, which is not that unheard of over a 2 year period, you actually left money on the table. In other words, by sitting out of the market, even though you think the interest rate is too high, you were still losing money because your home's going to appreciate. And there you were sitting in an apartment or in a property you weren't happy in, where you could have gone ahead and bought your home. Now, you mentioned something about buy downs, and I always have to remind myself when I'm teaching about the curse of knowledge, because I'll throw these things out, and you said 2-for-1 buy down, and you and I both know what that is. But walk our listeners and viewers through what a buy down is, because that's something a lot of real estate agents have been taking advantage of. And there are many sellers out there who would gladly help buy your interest rate down. But could you walk everyone through what do you mean by a 2-for-1 buy down? That's a great point, and I'd love for you to touch on that.
Yeah, and it's a very, very good tool in this market while seller credits are being handed out. And once again, that's why I do genuinely believe that right now is probably the best time to buy that we'll see in the next year or two, while these credits are being handed out. As a seller paid concession, it's one of the most powerful tools you can get. So say we have a 6.25% interest rate right now, just market rate. That would mean your first year, you're 2% lower than that. So you're paying 4.25% interest for that first year. The second year, you're paying 5.25%. And then for the rest of the loan, 3 through 30, most people aren't in a loan for a full 30 years, but technically you're back to the market rate. So what that does basically is the prepaid interest is just held in escrow, and it's paid by the seller. So it lowers your monthly payments a lot the first 2 years. And why it's so great to pair with that free refinance program is because that, like I said, it's held in escrow, but it hits your principal balance if you do refinance. Whereas if you buy standard points, those points, I mean, I don't want to say they vanish, but they pretty much, they vanish. So I think that's why the buy down is so powerful to pair with the free refinance. And the free refinance goes out to 3 years as well. So I would have to think at some point in the next 3 years, we're going to have a chance to, if it's not for, lower rate, some other reason, like cash out, maybe buy an investment property, do home renovation, something like that. So that's why I think the 2-1 buy down is so powerful right now. As long as it's seller paid. As a buyer paid, I mean, you can make a case for it, but as a seller paid, I think it's probably the coolest tool in this market right now that's not being leveraged enough as it should. Now a lot of my agents are using it and starting to come around. And once again, the more and more coffee meetings you go to and realtors you talk to, they're starting to understand how powerful it is as well. So you still qualify for your par rate, but it just saves you all that money up front on the first 2 years. And it's very powerful in that regard for sure.
Great information. And you're so correct. I mean, I know some people purchase a home and they say, oh, we're going to be in this for the rest of our lives. And I've been selling real estate since I was 18, 1978. And you don't know how many times, Kyle, I've heard people say, no, we're not going to do anything. And within a year, they come to me and want to sell their home, or within 2 years, they've refinanced it and then want to sell their home. And so, I mean, don't think that, we've got to wait, get that low rate. You never know. You may not be in the home that long, and the increase in value. There's so many opportunities. And that's why it's good to reach out to people like Kyle, and we'll have his information in our show notes, who can really analyze your situation and then help advise you on what's the best route to go. Because first-time home buyers, I mean, do you see most of them going the USDA route or FHA, or, I'm sure it depends, but what are you seeing first-time home buyers? Where do they tend to gravitate for the better type of loan product?
I'm seeing a little bit of everything, honestly. I mean, USDA is a very powerful loan product. I haven't seen as much of that just because it's a little bit more pinpoint in regard to where those locations are. You can get a USDA loan; they're more rural. I have done a couple, and they're right behind VAs as in the best loan products, but they require 0% down. So there's actually been veterans and USDA people that you can get in for $0 at the closing table in this current market. Like I said, the sellers are paying for closing costs right now, and basically in lieu of price decreases. So those are outstanding. If you're a veteran or if you're buying in a rural area and it qualifies, USDA and VA are tough to beat. But then I'd say the biggest buckets are going to be your conventional and FHA, and that usually just kind of goes off your credit score for the most part. And I always run analysis on each for all my borrowers so they can understand the pros and cons of each. Conventional is probably preferred for most people, I'd say. But there are times that FHA makes sense, especially if they're a new investor and they want to do something like a house hack. I do have some investors I work with who are interested in like FHA, duplex, or triplex house hacks. So that allows them to put 3.5% down basically on an investment property. They live in one unit and they rent the other unit or units out. So in my opinion, getting started real estate investing, that's probably the best thing you can do for yourself. 3.5% down, that's unbeatable. I mean, as you know, for other investment loans, it takes usually minimum 15%, in this market, 20. So that's a great way to get started as a real estate investor. Then you cash flow off of that. Then once again, you realize appreciation as well. So you check back in 3-4 years and you're like, wow, I'm making money and I'm getting, appreciation in my home. And, it's a game changer over a 3-year period. And I think that's one of the coolest things about the FHA is the house hacking situation.
Exactly.
That's my favorite FHA loan to do.
Yeah. And you're going to have a better chance, probably a better opportunity to manage that property being right next to doors, which is good too.
Exactly. That's true as well.
Yeah, you bring up a good point as that I was just thinking about if we went back 8 months, 10 months, 12 months ago, a lot of the VA, USDA buyers were being pushed out of the market because we had so many cash buyers or buyers that had deep pockets. Today is a great time for those of you who are first-time home buyers to really have an opportunity to put in offers on properties and be have a little bit more consideration given to you as a seller, which is very good. Are there so what kind of credit score does a first-time home buyer need right now?
Really, in theory, that's another cool part about USA Mortgage is we have no overlays on our guidelines, so we go purely off the guidelines. So the lowest we can go on FHA is 580. So usually from the 580 to 600 range, you're going to probably need some other compensating factors, which is a big word, but really you just need to make sure there's a couple other strong points of your application.
And that was 580 to what was the other number, 6?
So 580 and up, really. So that's the minimum. But conventionally, you have to be 620. So, but if I have a borrower who's going to be like 620 to 660 range, they're for sure going to get a better loan product with FHA. 680 can kind of be iffy. That's when you start to run the numbers. But really, anyone over 700 is mostly going to go conventional, I'd say. So it really just depends on your personal situation. But at the end of the day, kind of like we're talking about earlier, there's really never a bad time to buy real estate. So even if you do have a 620 score right now, you can work on that over the coming years. And getting a mortgage helps a lot with your credit score in general. And taking debt out and being responsible with that debt, as long as you're low utilization on a credit card or wherever else. So there's a lot of ways to work on that credit score over the next 2 years while you're in that home, and then refinance into a conventional or whatever else it might be. So really, it's just about getting into the home, and kind of like we talked about earlier, the cost of waiting is just one of the most overlooked aspects in this market. Is sitting there paying your landlord every month instead of paying yourself. It might not be the perfect loan product at the time, but just getting in and starting to pay yourself is the key of it all. And then work on yourself and work on your finances, work on your situation until you're ready to refinance down the road into a better product. But once you do that, you'll check back and be like, oh wow, I made all this money instead of paying it to my landlord. So it's there's never a bad time, no matter what your credit score is.
That's right.
At the end of the day, if credit scores are under 580, that doesn't mean we turn them away either. That doesn't mean we want everyone to get into homes. it's genuinely my passion to get people in homes when I get people to the closing table and stuff. So it's one of those things that, if you're not ready yet, we'll get you ready. We'll run a credit report. We'll see you need to work on this, you need to work on that. Here's some really common sense things you can do over the next 2 months, even to bump it up 40 points. Here's some things you can do over the next 6 months, depending on how dire the situation is. But, maybe they're not in a rush to buy either. Maybe they don't have their down payment and they need some more time to save anyways. So really it's just about making sure to work with a loan officer the second you are thinking about buying. So you don't have to be ready to buy yet. You really don't. I work with plenty of people who are not ready yet. They just want advice on how to get ready. So that's the big thing as well, is don't think you need to have your full down payment and closing costs saved up and, ready to make the jump. Just work with someone that's going to be able to get you ready in 6 months, year, 2, whatever it might be. Just kind of getting that plan in place. And that also holds yourself accountable too, is if you're not taking that step, then you're going to not hold yourself accountable and you're going to kind of fall into other ruts or other situations where you're not saving the money you need to or paying off the debts you need to get ready. So it really just comes down to, getting that advice on the front end and understanding paying yourself is the most important thing you can do. So when you retire, pretty much everyone's equity and wealth is built out of real estate at the end of the day, real estate in their retirement account. So it's just crucial to get into a house as early as you possibly can and start paying yourself, really.
I totally agree with you. And I thank you for sharing that. I always love, and we'll kind of go into this, I always love to ask loan officers and other brokers, managers on the podcast, because I have a lot of new agents who listen to the podcast and watch our shows. What advice, or let me rephrase that, what are you seeing successful agents doing that are generating business? I mean, is there anything that kind of pops out at you that I see this a lot? I mean, what advice would you give an agent? You need to do this if you want to grow your business, or this is what I'm seeing in successful agents in the Kansas City market. Any words of wisdom for our listeners and viewers?
Yeah, I mean, just market yourself in every way you possibly can. Social media, networking events, touching your sphere of influence as possible as often as you can. Just making sure people know what you do for a living. I mean, there's a lot of people that, they become real estate agents and they're a little bit shy about it. They don't want to, be pushy. It doesn't have to be pushy to make posts on, Facebook, or some people use TikTok. I personally don't. That's a very powerful tool, though. I just haven't done it yet. I'm a little bit stubborn in that regard.
I don't use it either. Yeah, but I get it.
And I know a lot of agents are having a lot of success with TikTok right now. I just haven't personally, but I personally use Facebook, Instagram, things like that to market myself on social media and make sure that my entire sphere knows what I do for a living. And to pair with that as well, it goes a long ways to use a good, lender that's going to get you awesome marketing materials, great informational, materials for them to send to potential borrowers or family members that might be interested in buying that, that they wouldn't even know they're doing real estate if they're not marketing themselves. And once again, just networking events is absolutely massive. You got to get in front of people. I mean, at the end of the day, it's a relationship-based business. So
exactly.
Yeah.
And that's how you and I met. You were at the Winter Business Conference for Missouri Realtors, and I went over to the USA Mortgage booth, and I introduced myself, and I said, hey, I've done a lot of podcasts for your company, and we've had some great folks. And if you haven't listened to some of the podcasts, you need to, because USA Mortgage not only wants to help you do a home loan, they want to help you grow your business. And I mean, when you see and hear about the video and the marketing and all these collateral, all of this collateral that they're helping real estate agents with, you don't have to go out and spend a lot of money. Exactly. USA Mortgage is there to help you.
Together for you for free. And then, I mean, so, there's obviously different levels to it. As you really grow your business, you might pay for leads or something down the road, but just getting started out, I mean, there's not a need to do that when you have a loan officer that's going to make you marketing materials and you can market yourself. Get your name out there, get your business started. So
exactly.
Yeah.
And here's what I wanted to say about you, Kyle. I've pitched this to other loan officers. We had a number of folks on the call. I never hear back from them. Kyle, he followed up with me and said, I want to be on your podcast. And, that shows me that if you're an agent listening and you have a deal, this guy's going to get it over the goal line. And I was going to ask you, who's going to win the game this week, the Chiefs or anyway. But, that impressed me, Kyle. And it just shows that if I am an agent and I bring you my clients, and say, we want to get a home loan, you're going to roll your sleeves up and go to work. I've seen you do
Yeah.
that just in wanting to do the podcast with me. So
Yeah, I think you
that
can
means a
ask.
lot.
Yeah, any of my current referral partners or past clients. I mean, you won't find anyone more educational or available than me. That's the two things that I really pride myself on, and I don't want anyone to beat me at.
Well,
So
I appreciated you reaching out to be on the podcast. So I just want if you're Kyle's licensed in several states. And by the way, you can always call him if you're watching this and you're in Washington or somewhere. USA Mortgage, I believe, is in all 50 states now,
yep,
maybe.
yep.
And so Kyle can get you hooked up with the right loan officer wherever you're listening or watching this throughout the United States. But you are licensed in several states, does a lot of work in the Missouri, Kansas area, and we have a lot of Kansas, Missouri agents. But that was impressive to me, Kyle, and I want you to know that just shows your commitment to me as a loan officer. And so thank you for reaching out. Any other words of wisdom you want to provide the audience with, loan-wise, or predictions on the game? No, we won't do that. But on loan-wise or agents or anything you want to add to the...
I guess my biggest thing I'd say is just don't settle when it comes to what lender you're using. It's one of those things that you can tell pretty quickly when you work with someone who cares and who doesn't care. And so if you find someone that you're having a hard time, connecting with or getting a response back in a timely manner, stuff like that, just don't settle. I mean, there's thousands and thousands of loan officers in the U.S. So, give someone like myself a shot or another great USA Mortgage loan officer a shot. We're going to take good care of you. We can promise you that. If you'll tell the ones that do. So, I mean, that's my biggest thing. And find someone who's available. There's so many people who just, turn their phone off on the weekend, and there's a lot of real estate that happens on the weekend. So it's pretty imperative to have someone that's, willing to work 7 days a week, do open houses with you. That's another cool thing that USA Mortgage does is we have really good open house, websites and stuff like that we can help, basically get your name out there and get some, leads into your pipeline and stuff once they sign to our website, and make marketing materials for you. And genuinely, we want to make it as mutually beneficial as possible. I mean, at the end of the day, it's a relationship business. If you send a client to me, I don't take that lightly. First of all, I'm going to work my tail off to get it closed and get them educated, but I also want to try and help you grow your business, and I want to grow together.
That's right. So, good. And I think I heard your little dog in the background giving you some kudos too, to say this guy will work hard for you. He's a good pet dad. So, well, listen,
one's down on me right here, and the other one's out there barking. I guess I thought he'd be good through this now, but
yeah. Well, Kyle, thank you so much. I just want those who, if you're a real estate agent listening or watching this podcast, and you're thinking, marketing, you mean how do I get some stuff to help me grow my business? If you want door hangers or flyers, or you're doing an open house and you need some collateral to show, sometimes just a flyer, a lot of buyers don't know that they can get into a home on a USDA or a VA. And so they can make up flyers that will show, here's how much money you need down, here's what your proposed payment would be based on various parameters. Reach out to Kyle. He can tell you more about the marketing activities that they have. If you're a consumer watching and you want to get a home loan, give Kyle a call or a refinance. He can help you with VA. They have so many different products that are out there. One of the really cool products was, and we had a podcast on it, you were doing a little bit in these multiple offer situations, was that basically if you guaranteed the loan, and this was only in certain states, I should say as well, but just to show you the creativeness of USA Mortgage, when these multiple offers were coming in, that if they did a loan approval and they couldn't close that out by a certain date, they would go ahead and give you cash to buy the house. And
that's one of my favorite programs, and I do want to speak on that for a second. So we have two separate aspects of that. One is the 5K guarantee. So if we fully underwrite, I fully underwrite all my files just because it takes a lot of stress out of the process once we do get a contract. And so once we have that fully underwritten, we can easily close it in 2 weeks. So that 2 weeks is guaranteed with the 5K payment to the seller from USA Mortgage if we don't close it in that time. So that's pretty powerful. I mean, you go to a bank, you're going to be talking like a 45, 60-day close sometimes, or they'll maybe say 30, but it depends, I guess. But we'll close it in 2 weeks, which is almost, that almost is as good as cash to some extent. It's that 5K guarantee. And then, yes, we also have an in-house cash program where we'll make a cash offer for them. There's some lenders can do that, but they have to go to a third party, and it just gets a little dicey with, all the different aspects of it. And there's also a lot more fees. Ours is in-house. So if you have
Right.
a 680 credit score, credit score, we'll make the cash offer for you, and then we'll structure it after. So there is a little bit of a fee on there, but it's nothing that, if you love the house, you won't care about that small fee at the end of the day. So having
And
both those, especially if the market
yeah.
does heat up come summer, it's going to be huge again. But the 5K is huge to offer even just the listing agent. I always call my listing agents as well and just talk about the strength of the offer, my borrower situation, how much I love the house. Having someone who cares enough to do that type of stuff is going to win you some offers. I've beaten out multiple all cash offers just this year by doing little things like that. It's just taking that extra step and, caring more than the next person really is what it really comes down to.
Well, and what it shows me is USA Mortgage is trying to always be thinking about the market, the situation, and putting the consumer first. And so, what a great program. Well, Kyle, thank you so much. This was just a fascinating interview. Be sure and reach out to Kyle. We'll have his information down below. He can help you getting your home loan. And if you're an agent, he can help you find some business by giving you some ideas on what they're doing marketing wise and what they can provide you, as well as help you with any potential clients or customers you might have. Kyle, thanks again for joining us. It's always great to talk to the USA Mortgage folks.
Yeah, thanks again, John. It was great to meet you, and I really appreciate the opportunity to chat with you.
All right, thank you. Thank you for listening to the podcast for Global Real Estate School. I'm John Mayfield, the Real Estate Tech Guy. Go out and make it a great day.
Topics discussed on this podcast are for informational purposes only and are not a commitment to lend. Additional terms and conditions apply. Interest rates and products are subject to change without notice and may or may not be available at time of commitment or lock-in. DAS Acquisition Company, LLC is not affiliated with or endorsed by any government entity or agency, including the USDA, HUD, or VA. DAS Acquisition Company, LLC, doing business as USA Mortgage, MLS number 227262, Equal Housing Opportunity.
Most enterprises use disparate systems to manage spend. The result? A reactive manual approach. CFOs and controllers, you deserve better. You deserve a unified spend platform from Brex. Brex makes it easy to proactively control spend with cards, spend management, travel, and bill pay in one place. You can create budgets with controls built in, track and adjust in real time to keep teams accountable, and automate compliance to close the books faster. Ready to control your spend with one unified platform? Visit Brex.com.